Before we begin, a strict disclaimer. What follows is my personal trading framework for the upcoming session. This is not actionable financial advice. You execute your own trades and you manage your own risk. We are mapping the market landscape following the close on Monday, August 12th. This analysis is specifically designed to prepare for the opening bell on August 13th. Over the past week, we witnessed a violent V-shaped recovery off the early August lows as buyers aggressively defended critical support levels. However, that upward momentum has completely stalled over the last 48 hours. The aggressive buying has stopped, and price action has settled into a tight horizontal channel. This is structural consolidation. When an index trades in a narrow range after a massive move, it compresses, storing energy for the next violent expansion. To build a proactive trading plan, we will deconstruct market breadth, analyze chart structures, and map the incoming macro data. Entering the August 13th session without a structural roadmap is gambling. At this level, price action is resting on a knife's edge of incoming data. This S&P 500 heat map reveals massive internal divergence. Mega-cap tech is bleeding, dragging down heavyweights like Microsoft, Apple, and Amazon. Yet Nvidia holds green. Meanwhile, capital flows into financials and defensives, showing strength in JP Morgan and Walmart. This is sector rotation, the deliberate movement of capital from high-risk growth into lower-risk defensive assets. This rotation anchors the major index prices. The tech sell-off is perfectly offset by defensive buying, creating stability that hides the internal churn. This targeted reallocation of capital indicates a market preparing for a new directional move, rotating risk rather than liquidating to cash. On the 1-hour S&P 500 chart, the V recovery has transitioned into a tight horizontal holding pattern. Looking at the volume profile below, the bars are tapering off significantly as price consolidates. Declining volume during consolidation signals that institutional players have stepped aside, waiting for a macro catalyst before committing new capital. The tech weakness from the heat map is glaringly visible on the 1-hour US 100 index chart. Note the series of lower highs forming on the right. Buyers are stepping in at progressively lower levels, creating downward structural pressure. These lower highs make the Nasdaq structurally vulnerable. If incoming macro data is bearish, this chart is primed for a breakdown. Contrast that tech vulnerability with the Dow Jones. Because of the rotation into financials and industrials, the Dow shows a shallower, resilient pullback. The consolidation here is flatter and more stable. The indices are fractured. With the S&P weighting, the Nasdaq is heavy and the Dow resilient, meaning our trade direction must hinge entirely on the incoming macro data. This is the economic calendar for August 13th, showing exactly what institutions are watching. We have two high-impact USD events scheduled: core PPI and unemployment claims. Core PPI measures wholesale inflation. A hot read here, meaning wholesale prices are rising, threatens the market's hope for imminent rate cuts. Unemployment claims are the current pulse of the labor market. Traders are watching to see if the workforce is deteriorating or simply normalizing. The market is trapped between the fear of inflation, which delays cuts, and the fear of recession, which hurts corporate earnings. The technical patterns are just empty vessels. The fundamental surprise in this macro data will provide the explosive volume needed to break consolidation. We step into the open without a strict directional bias. We are deploying a reactive posture. Our strategy is mapped into two distinct paths based on how the catalyst hits. Scenario A is the bullish break, triggered if PPI comes in cooler than expected and jobless claims remain stable. We look for a volume spike breaking the S&P 500 above resistance, targeting longs in mega-cap tech as defensive rotation reverses. Scenario B is the bearish breakdown, triggered if wholesale inflation runs hot and jobless claims spike, stoking stagflation fears. The heavy Nasdaq structure will likely lead the technical breakdown. We short tech weakness while avoiding the resilient components in the Dow. Mapping these paths in advance eliminates emotional reaction. We execute only when the data and the chart structure align. Do not front-run the data. Entering positions before the 8:30 a.m. drop is gambling on a coin toss. Let the data trigger the initial volume, and let that volume confirm the trend. The first 15 minutes after the print are often dominated by algorithmic whipsaws. Patience is required for the true trend to emerge from the noise. Reiterating the final disclaimer, This breakdown is a personal roadmap for August 13th, not a financial directive. The market has built the structure, and the calendar holds the match. Our job now is to manage risk when the fire starts.